Welcome to the Fear and Greed Business News Afternoon Report for Tuesday, the 28th of January, 2025. I'm Sean Aylmer. Every afternoon, we've got the 5 stories that happened today that you need to know about. Story number 1, the local share market ended the day down 10 points to finish at 8,399 points. But that belies the crazy 24 hours we have just had. A Chinese startup, DeepSeek, has produced a chatbot to rival ChatGPT and reportedly spent just $6 million doing it. That's uber cheap compared to the hundreds of billions of dollars that are being spent on AI. And while the veracity of the claims is still untested, the idea of having a much cheaper technology out of China spooked Wall Street. The tech-heavy Nasdaq closed down 3%, with the biggest casualty being chip maker Nvidia. It lost nearly $600 billion in value overnight. That's close to 1 trillion Aussie dollars. The fear is that the Chinese product means people won't need to buy as many Nvidia chips. That sent Nvidia's share price down. Locally, the news hit the local data center operators. Maybe we just won't need as many of them. NextDC was down 7%. Goodman Group was down 7.5%. Digico was down 12%. Also, the uranium stocks got sold off as well because maybe we won't need as much energy. Story number 2, we're staying with the market. I said that it was flat, but there was plenty of movement outside the data centres and uranium stocks. Among the large caps, the banks found favour, with National Australia Bank, Westpac and ANZ all doing well. Wesfarmers was another strong performer, as were Aristocrat Leisure, REA, QBE and Xero. The underperformers included Macquarie Group, Woodside and Santos, the energy giants, Transurban, WiseTech Global and Pro Medicus. In corporate news, Myer's takeover of Premier Investments apparel brands is complete. Dottie's, JJ's, Just Jeans, all owned by Myer. Now, the new look expanded retailer will have 783 outlets and annual sales of about $4 billion. Commonwealth Bank has sold its stake in a China-headquartered commercial bank called Bank of Hangzhou for $940 million. Gold digger Newmont has sold a mining operation in Canada for about $675 million. And Fortescue Metals is buying Red Hawk Mining for around $250 million. It's a Western Australian iron ore company. Fortescue has the backing of the board on that one. Story number 3, Federal Treasurer Jim Chalmers today said there are real reasons for people to be confident about the rest of 2025. He said real wages are growing, inflation is falling, and tax cuts are rolling out. He expects growth to pick up a bit, but not a lot. His words. He also talked about the improvement in the cost of living. Now, tomorrow we get the December quarter inflation figures. They'll be pivotal in determining whether or not there'll be an interest rate cut next month. There's still some uncertainty around global growth. That seems to be the thing that Jim Chalmers is most worried about. Meanwhile, Peter Dutton was in Western Australia. He was asked about the coalition and women voters. He basically said that by and large, women look after the household budget. They're being hit by the cost of living. Therefore, women voters are turning to the coalition. Not sure if that makes sense or not. Maybe. Story number 4, Sigma Healthcare's share price jumped 12% today after merger partner Chemist Warehouse reported record sales in the 6 months to the end of December. The pharmacy giant reported $5.15 billion worth of sales in the half year, up from $4.56 billion 12 months earlier. New franchise store openings and international expansion was behind the rise. Chemist Warehouse also said that it's implementing a new supply agreement to drive efficiencies. Sigma Healthcare and Chemist Warehouse are expected to merge next month, creating a $30 billion company. And story number 5, Nuix share price fell more than 20% today after the software provider said it would post a fall in underlying earnings in the half year to December. The reason? Project delays and the company taking on more complex contracts. He said growth would be weighted towards the second half of the fiscal year, though investors weren't impressed. Nuix had a wild ride, really. It listed late December 2020, surged, then crashed, and I mean crashed. It bobbled along, improved management. Last year was among the best performing stocks in the ASX, up 400%. This year, including today, it's down 30%. That's it for the afternoon report for Tuesday, the 28th of January, 2025. Make sure you hit follow on the podcast. We'll be back tomorrow morning with the Wednesday edition of Fear and Greed Business News. I'm Sean Aylmer. Enjoy your evening.